Hello and welcome to this week's edition of Retire Well, brought to you by the team of Citizen Advisory Group. I'm your host, Kristen Oakley, and joining me in the studio is the owner and financial advisor, Kevin Bucher, and financial advisor, Pete Samanuk. We're so glad you're joining us today. We are going to have a very important conversation about the 5 essential pillars that can make up having a secure retirement and financial plan in process. Whether you are decades away from retiring or you can see retirement around the corner, you want to make sure that you have all of these 5 areas of your financial plan locked and loaded and working comprehensively for you. So we're so glad you're joining us today. Kevin, Pete, excited to have this important conversation with both of you.
We are.
Yes,
we always love being here.
Yep, great to be here.
Yes, well, thank you. Well, I know, we talk a lot about the 5 checkpoints. And so we wanted to really do a deep dive on these for a lot of our viewers. I know a lot of people are newer to you. Talk a little bit about why you're so excited to have this conversation.
Well, so the 5 areas of financial planning are something that I love to talk about. Mm-hmm. So I love doing a show about these 5 areas. We could do a show on each one of the 5 standalone, mm-hmm. But so we're going to try to bring it together in a two-part series. Mm-hmm. But there's just a lot that goes into financial planning, involving not just the investment portfolio. That is certainly a piece of it, but you have your investment management. You have your retirement planning strategies around your savings when you're working, and then your income strategy when you're no longer working. You have tax planning that goes into that then, because we want to be as efficient as possible around our investments, our income, and our taxes. But then we also want to make sure we're protected and we have proper risk management strategies around our insurance, whether that's health insurance, life insurance, our home and auto insurance. And then finally, we want to make sure we have our legacy and estate all buttoned up and we have everything in good order. Mm-hmm. So there's a lot that goes into this 5 areas of financial planning. Mm-hmm. And when we do it right and we do it well, we can really just get the best possible outcomes throughout the course of the retirement period. Mm-hmm. And that's what we're trying to do. We're trying to help people live better lives through these areas of financial planning.
Yes, and this is something that really sets you guys and the team of Citizen Advisory Group apart, because so many financial firms out there only really focus on the investment management piece. And while that's a critical piece, to your point, it's just one of the 5 pillars we're going to be going over during this 2-part series.
Yeah, and that is what you said. I mean, when you meet with an advisor, most of the time they're really just talking about the investment management. Mm-hmm. I can think about an appointment I had this week with a woman, and it was just interesting to me because I'm thinking, she meets with her advisor twice a year, mm-hmm. and I started asking her questions about her Social Security, mm-hmm. her insurance, what did her estate planning look like, and it's not really her fault, but she couldn't answer the questions, and it was just areas that the other advisor really wasn't addressing at all.
Right.
And it just kind of hit me, and I was thinking, what do you talk about in these meetings? Mm-hmm. And I guess just investments and returns and things, and it's just so much more than just what stock you own or what mutual fund and mm-hmm. and what investments you have. Again, that's a big part of it, but there's just so much more to it when you tie it all together. And that's what excites us.
To it. Yeah, for sure. And we have some data that I think is really important to share with our viewers that kind of sets the context for this whole conversation. So this is according to Vanguard's Advisors Alpha Research, that working with a comprehensive financial advisor can potentially add about 3% in net returns annually through proper planning. Also, a 2022 study by Dalbar found that investors who work with advisors stayed invested during times of market volatility and outperformed do-it-yourself investors by nearly 4% annually over a 20-year period. Now, when you put dollars to those numbers, it makes a huge difference, right?
Yeah, and that's why what we're not talking about is that we know more about the stock market than the next person. When you're talking about you can get more returns from a portfolio, it's not because we know what's going to happen in the stock market or we have some time-tested, proven strategy, when to get in, when to get out. It's all of the other factors. It's when you're tying together the retirement planning and the Social Security strategies mm-hmm. and the risk and insurance planning and the proper investment allocations, and then adding in the emotional factor. A lot of times when it's just you out there doing it on your own, knowing when to get in. People are trying to market time, get in, get out. You don't have a partner helping you through the emotional times. Mm-hmm. And that's really where this data, that's where the difference is made. Right. When you're talking about getting an extra 3% per year, getting 22% more income over the course of a retirement, it's because you're adding in the emotional factor, and that's a big part of what a planner and an advisor does.
For sure. Well, the first pillar is investment management, so we need to do a deep dive on that to kick off this whole conversation. So let's jump right into that. And the issue is a lot of times many retirees are taking on too much risk with their investments, and they haven't made that shift to needing to adjust their money to meet where they are in life. So how do you all go about finding that sweet spot for each person that you work with?
Yeah, so it starts by asking a lot of questions and really getting to understand the individual person that you're meeting with or individual couple that you're meeting with, understanding the goals and objectives that they have for the money that they've saved. Mm-hmm. And it is different for every single person. Everyone that we meet comes in with different situations as far as what their Social Security benefits will look like in retirement, whether they have a pension or not, mm-hmm. what their needs are as far as how much spending money that they actually need to support their lifestyle. So everyone's situation is different, so it really starts with asking a lot of questions mm-hmm. and being a very good listener to what that individual is looking for when it comes to their retirement and what the goals and objectives are. Mm-hmm. So part one is goals and objectives based.
Right.
Then we have to then take into consideration several other factors. Number one, time horizon. Time when you're investing in the stock market, time is important. Mm-hmm. We've talked on other shows that it's not so much about market timing, but time in the market. So we need to understand mm-hmm. the time that you have between today and when your utilization of these funds will be. We need to understand how you feel about risk from an emotional standpoint. Mm-hmm. And what I mean by that is, as we're going through these turbulent times where markets are up and then down, how do you emotionally handle that?
Mm-hmm. Because everybody's different, right? That's the reality. There's no cookie cutter approach to that.
Believe it or not, some people are comfortable with that roller coaster ride, mm-hmm. and then there were some people that don't want any part of the roller coaster ride. Mm-hmm. And then there's some people in between.
Everything in between, right.
Yes. And then the final piece of the investment strategy is really understanding the financial capacity that you have for volatility. Mm-hmm. So for example, if I'm meeting with somebody that is relying on a withdrawal from this account to keep the lights on in their house and food on the table and a roof over their head, well, their capacity to take risk and to go through volatility is much lower mm-hmm. than someone that is meeting those needs through Social Security or pension benefits.
Right.
So time horizon, mm-hmm. Risk tolerance, financial capacity to take risk, mm-hmm. and then ultimately the goals and objectives. Mm-hmm. All of that has to be considered as we're putting together the right investment portfolio for this person.
For sure. And what do you often see are the common mistakes folks are making? Maybe when they come and meet with you for the first time and they're getting a second opinion, where do you see them making decisions that could be pitfalls for them when it comes to their investment management? Yeah,
and the investment management, going back to, is not to us about finding the right stock, finding the hot stock, or mm-hmm. knowing when to get in and when to get out. It's really having the specific investments tailored to your specific situation. Mm-hmm. And backing up to what Kevin said is what is that individual trying to do? Mm-hmm. And I feel like 95% of the time somebody goes in and meets with an advisor, and that advisor already knows what they're going to try to sell you or what they're going to try to put into your portfolio without even knowing you and your specific situation. Mm. So I would say one of the pitfalls that people have as they're, at any point in life is, I'll just speak to when you're 55 and older and approaching mm-hmm. retirement. I met with a woman, she's 67, and she's been retired 2 years, and she's never moved the money out of her 401k. Mm. And she's fine on Social Security right now. That she took Social Security, she's married, and that's all she needs. Mm-hmm. But now we are going to start to look at, she wants some more money, we need to start taking it from the portfolio. Mm-hmm. And I'm looking at her 401k with her, and she has the exact same things in that 401k that she did when she signed up when she was like 26 years old, and she's 67.
Right, so she's 67 but still invested like
still invested in the exact same thing. Now, that has worked out for her, okay? Mm-hmm. It has luckily worked out for her, mm-hmm. but the time to change is now, right? You can't have the same things that got you here aren't the same things that are going to carry you through. So that's one of the major pitfalls, I would say, is people just aren't regularly rebalancing or checking what they're supposed to be changing their investment strategies to based on them. Yeah,
so to piggyback off of that, so what you're explaining is as the goals and objectives changed, the investment portfolio didn't change.
Right.
So I would say that sums up what one of the bigger mistakes that we typically see is that as a 30-year-old, my goal was one thing, but now as a 50-year-old, my goal is now changed. So I needed to change the investment approach for that new goal and objective. And it's exactly why we offer this retirement checkpoint review, so that we can look at your investment portfolio and make sure that it is in sync with those goals and objectives, so that you are invested to reach the goal that you have set for yourself.
Very well said. Kevin, Pete, thank you. I'm excited. I know we've got a lot more to get to on today's show. To our viewers at home, maybe that's you. When's the last time you looked at what you're invested in? Are you taking on too much risk? Are you taking on too little risk for where you are in your situation? This is why the team of Retire Well and Citizen Advisory Group would love to be able to sit down with you and build and provide for you your very own complimentary retirement checkpoint review. To claim yours, all you need to do is call 866-630-1675, or if you prefer to connect online, simply scan that QR code and that will get you connected as well. We'll be back with more right after this.
As individuals, we strive for better, from a better house to a better career to a better life for our kids. But when it comes to your retirement, what does better mean to you? More income? A flexible lifestyle? Better solutions? A better retirement begins with a plan. To get your complimentary written financial plan, call the number you see here. You only retire once. This is your opportunity to plan for better.
Think your retirement savings are all yours? Think again. Your 401k, IRA, or pension comes with a tax bill from Uncle Sam, and it could be bigger than you expect. Want to find out how much? Our quick and easy tax calculator can show you right now. Just scan the QR code or visit mytaxbilltest.com to see your potential tax hit and how to plan around it. Imagine not having to face your retirement with the same old corporate solutions as everyone else. In these economic times, you deserve a fresh perspective that includes a personalized retirement income plan, investment portfolio analysis, and tax map from an independent fiduciary advisor whose focus is on you. Call the number you see here to schedule your complimentary review right now.
Welcome back. You're watching Retire Well. I'm Kristen Oakley here with both Kevin and Pete from Citizen Advisory Group. We're so glad you're joining us today. If you are just tuning in, we are covering the 5 pillars of having a solid, comprehensive financial plan in place for yourself and your retirement. We've covered the subject of investment management, which is the first pillar. Now we're going to move on to the second pillar, retirement planning. Now it's interesting because I'm sure some folks watching are going, wait, how is that really different from investment management? And yet it is. So talk about that.
Yeah, I'm kind of thinking that as you're saying that too. It's like, isn't the whole thing retirement planning? And specifically what we call retirement planning is, I'll call it like cash flow and income planning, is where are we going to get our paychecks? And what are we going to rely on for actual income in retirement? So that's going to that ties in with investment management a little bit. You know, if we're going to be getting income from investments, but it's really talking about building out a sustainable, guaranteed stream of income with your Social Securities, your pensions, and that kind of stuff. And what's the proper mix of things for retirement planning?
Yeah. You know, if I may, while you were talking, Pete, it kind of reminded me of, okay, investment management is what got you here, right? You've grown this lump sum of money. Retirement planning is how do we take this lump sum and then turn it into reliable ongoing income that's going to last someone the rest of their lives. So what's the cornerstone of building a solid income plan for someone?
Well, I think it starts by having stability and security and some guarantees built into the retirement plan. So, you know, as you guys were kind of talking about the differences between investment and retirement, I couldn't help but just take my mind to the fact that maybe it is hard for most people to understand the difference between investment management and retirement planning. And maybe that is why most people we still see to this day don't actually have a retirement plan, specifically a retirement income plan. So it is something different. It's a standalone thing. And I would argue if you're in your pre-retirement years of 5 to 10 years before retirement, or you already are retired, that is the number one critical piece that you need to have in place, because so many other areas of financial planning piggyback off of that retirement income plan. So when we're building out the retirement income plan, it starts by having a Social Security strategy to try to optimize your benefits from Social Security, making sure couples are utilizing strategies between each other to get the best deal from Social Security. It's understanding potential pension benefits so that you're getting the right benefits from your pension. And then what is the portfolio withdrawal strategy that we accompany that with to support your basic living expenses while also keeping in some reserves in place for discretionary spending, spending shocks that are going to happen throughout retirement. So that right balance of safety and security, while still having some money allocated to growth for inflation protection, discretionary spending, and those spending shocks that we all know happen throughout our lifetime.
Yeah, and if I, as you're talking, it is making me think as well, is that, Kevin, if you think about when you're building out a financial plan, or you're starting with someone, you've just met them, you've got all the information, the data in front of you, what's the very first piece you build out?
Yeah, so what he's getting at is we did investment management first, and we always think about it in this order, that it's investments, income, and taxes. But the reality is, most of the time when we're meeting with someone, the number one thing that is missing when we're going through this retirement checkpoint review is the retirement income plan. It is the number one domino that we start with when we're doing the financial planning process.
Well, and that after you have that in place and you know, okay, this is Social Security, these are the pensions, these are how we're going to use them, this is survivorship, then we can go move on to the investment strategies. But I tell people this all the time, especially in my public seminar that I give, is I can't tell you what to do with your money and what your investment strategy should be or where your money should be allocated until I know what the retirement income plan looks like first. So it is really the most paramount thing to us in retirement planning.
For sure.
Is that before we can even tell you what to do with your money and where it should go, we have to have that income plan in place first.
Well, because it is all about income.
Yep.
That's what success in
It is.
retirement
It
is about, right? Now, you did mention Social Security, and I know that this is something that sets you all apart. You look at this as part of a comprehensive, holistic financial plan. And I found this really interesting. So obviously, there's a lot of talk out there about maximizing your Social Security benefit, but really it should be about optimizing it for you, and it's going to depend on your individual situation. But a study from United Income found that most retirees on average are costing themselves over $111,000 in Social Security benefits over their lifetime because they didn't plan properly for that. That's a huge, when you think about that, that's a lot of money that is left on the table oftentimes.
Yeah, so we have to figure out how to separate the retirement process. So I think a lot of times we people tend to tie the Social Security filing as part of the retirement process. As we need to change that mindset to Social Security really being just one of your retirement resources and putting together a retirement plan that includes the right time to file for Social Security, which may or may not coincide with your actual retirement date. So those are two separate things.
Yep.
They obviously play together,
Right.
But finding the right Social Security strategy can make a significant impact to the long-term sustainability of your plan.
Yeah, and that might change over time. You know, as circumstances change, that might change. I had a call this week, and this individual just retired probably 6 months ago, and he said, is the plan still the same on Social Security? And well, it is. It's the same for now. And just because we had a little bit of market volatility earlier this year here in 2025 doesn't change the plan. And that goes back to what we said in the beginning, is it's our job as advisors to help you make the correct emotional decisions when things are a little bit dicey. So yeah, we've had market volatility, but in our mind, that doesn't change what you're doing with Social Security. And that's where the emotional thing that people sometimes they don't have that. So you have to have someone in your corner saying, we're going through some chop, we're staying with the plan, but that might change as well.
For sure.
Depending how much.
And it's also helping people with unexpected expenses because life still happens in retirement, right?
Always.
Yeah.
Yes. It will continue to happen until it doesn't.
Yes.
So
true. It needs to be planned for.
But so when we're doing the retirement checkpoint review, I think that it's the number one thing that usually stands out that we have to start addressing first is there needs to be a written retirement income plan that is, again, the cash flow strategy of bringing together your Social Security, pension, and portfolio benefits and putting that down on paper so you can see how you're going to support your expenses throughout the course of your lifetime. And once that is done, it actually makes it fairly clear and straightforward then what we need to do with your investments to reach the goal and objectives of income, and then what's left to invest for long-term growth. Then also, that ties into our next segment. Once we have that retirement income plan and we know what your income projects to be down the road, we can now start doing tax analysis and looking at when are going to be the efficient windows for you to pay taxes on your pre-taxed accounts. So without that retirement income plan, we really can't do the investment planning and the tax planning. That's why these three pieces are so coordinated together.
Yes, for sure. And they go hand in hand. So I'm glad we're having this conversation. As we said, we could do an entire show on each one of these pillars, but we hope that doing a deep dive and giving you this overview is helping you ask yourself the question, do you have a plan that addresses all of these things? If not, we encourage you to reach out. The team of Citizen Advisory Group would love to be able to sit down with you for no cost, no charge, no obligation, and provide you with your very own complimentary retirement checkpoint review. 866-630-1675 is the number to call, or you're welcome to scan that QR code and that will get you connected as well. When we come back, we're going to dive into tax planning, a whole different ball game than tax preparation. Stay with us to hear what Kevin and Pete have to say about that important pillar right after this.
Did you ever think your own retirement will be shared with our government? It's true. Your 401k, IRA, pension, or similar retirement accounts are in partnership with Uncle Sam. Simply put, they want their tax dollars and you have them. With our latest calculator, you can plug in your own numbers while sitting at home. To see what your tax liability to Uncle Sam projects to be, scan the QR code or go to mytaxbilltest.com.
Do you own an annuity? Are you aware of what type of annuity you own? For years, annuities have been considered a cornerstone of retirement planning, but they're not all created equal, and your current annuity might not be serving your retirement goals. The good news is, rising interest rates could mean better guarantees and better benefits for your annuity. If your annuity is not working for you, would you like to know sooner than later? Call now for your complimentary annuity review.
Welcome back to Retire Well. I'm Kristen Oakley here with both Kevin and Pete from Citizen Advisory Group, where we are doing a deep dive, a part 1 and part 2 show on the 5 pillars of comprehensive retirement planning. Are you making sure that each of these areas is checked off in your own life? It's time for us to talk about the third pillar, tax planning. And success in retirement isn't about how much you have, it's about how much you get to keep. And what a lot of folks don't realize, I know you have this conversation day in and day out, is that taxes can be one of the biggest detriments to folks keeping their hard-earned money. So we got to talk about this.
Yeah, and I want to back up to kind of Kevin finishing off the last segment, and it made me think in detail, is that when we are putting these pillars in place, there kind of is, I mean, from our process and what we do, a specific order in which we do them, you know, and one isn't more important than the other. I mean, in some instances there are, but we do have to have that retirement income plan in place, and then we'll probably move on to the investment strategy, and then we'll move on to tax planning probably third, not because it's less important, but because we need to understand some of the other pillars before we start. You know, it's like when you're building a house, right? We have to build
the foundation.
Right, you have to build the foundation first, and then after that, maybe we can start to build the frame.
Exactly.
And then after that, we can put the drywall in or whatever. I've never built a house. I'm actually terribly unhandy, so I have no idea what I'm talking about.
But yes,
I think we get the gist to some degree, right? And it's the same thing when it comes to this. And tax planning is very important in making sure that you're kind of beating Uncle Sam and you're keeping as much as you possibly can when it comes to withdrawals and just whatever it may be.
And again, there's a distinction here because we're not talking about tax preparation. That's something we all have to do every year. What makes tax planning so different? Yeah,
so tax planning is really looking out over the future and trying to determine your tax liability through these different phases of your life and figuring out the optimal times to deal with some of the taxes. So I think I could sum this up in this way, that when we think about tax rates, the different tax brackets, the expectation is when we look out farther into the future that tax rates are likely going to be higher than they are today. but does that mean that your individual tax rate is going to be higher or lower in the future? And without knowing what your income is, you don't know what your projected tax rates will be, because you pay tax on your income.
Right.
So we were talking about this in the order. It's like dominoes. So when you're setting up the dominoes, you got to set them up in the right order so they can continue to knock each other down.
Right.
So the domino of having the retirement income plan is the lead domino, because with that, I now know what your income is going to look like down the road, and now I can determine what your tax liability is. Now, tax rates might change, but I have some information that I can use to properly assess this for you.
Yeah.
So a common misperception that people have is that, my tax rate's going to be lower when I retire because my income is going to be lower, only to find out that, your income actually isn't as much lower as you thought, so your tax liability isn't a whole lot different.
Yeah, and when you throw Social Security in there with it, I mean, it changes how everything's taxed and when we're going to take it, and just all these moving parts and these 5 pillars, they're just all so interconnected, and it's really what makes the Citizen Advisory Group difference to us, is that we're connecting all those 5 pillars instead of just one and having different specialties.
Right.
So.
Well, I know we need to continue this important conversation next week when we do the part 2, and we'll dive back into the tax planning, but you do have an awesome resource. We're going to put this website for you here on the bottom of the screen. If you want to get a jump start and see what your potential tax liability might be over your lifetime, we encourage you to visit mytaxbilltest.com. You can scan that QR code. And again, we'll talk more about this next week, but this is a complimentary resource for viewers to use. And I know that you often meet with folks who do this website, they get the complimentary report, they come to you and they say help, because awareness is the first step to realize, okay, I have a tax problem heading into retirement.
Yeah, and it's very real. I mean, I think a lot of times you're going to look at the numbers and be pretty surprised, but it is very real, and it's just really simple mathematics. And you have a tax plan, whether you know it or not. You have a tax plan. That might be the government's tax plan. It might not be your tax plan, but you don't even know that it exists.
Right.
So.
Yeah, so the tax tool is going to show you, this is we know what the IRS rules are, so it's going to plug your situation in to follow the IRS's rules and what your tax liability is. And it really makes it pretty clear that we need to do proactive tax planning to get away from the IRS rules and get onto our own proactive tax plan.
And as a cliffhanger, when we come back next week, we're going to dive deeply into how to do that, right?
To be continued.
Yes, to be continued. Kevin, Pete, thank you so much. But what you can do right now is pick up the phone and call to schedule your time to come in and receive your very own complimentary retirement checkpoint review. 866-630-1675 is that number to call. Thanks for being here. We'll see you next time here on Retire Well.